Hi, today is Monday the 7th of June and this is the SPX outlook for the coming week. As you can see, last week SPX held to a fairly tight trading range. First, on the 1st of June, tried to break this strong resistance. Then late in the week, it retraced to 41.65, which is the first fib on this pattern, from 40.60 to about 42.30. And then on NFP on Friday, the market grounded up and even penetrated the strong resistance again, and at this point it could actually go higher, although the same hesitation should prevail for probably a few weeks, a few days, if not the whole week. And the next important information will come from the FOMC on the 15th and 16th of June, so I think there will be the same hesitation going forward. Of course, with liquidities in the market, everything is taken as a good news. We really need a serious surprise, some really bad news to really change the current equilibrium. So if we look at the next possible target, it would probably be around 42.60, if not higher. Of course, now we need to see whether this level is not tested for support, or whether it dips below and returns to the former trading range. At this point, the market can actually find some equilibrium above 42.20, and that would be maybe a little bit disconcerting for market neutral traders. But overall, I don't see the market shooting up. It may carry on grinding up. We can only hope that the market goes back to its previous range and carries on drifting down. So I would say same hesitation and with a bullish momentum, or at least a bullish bias going forward. If we look at the longer time frame, 1 day, here we see that 42.20 is not such a strong resistance, and it may eventually grind higher to 43.80, but that should take a while. But what we definitely see on this longer time frame is that there's no bearishness in the market. As a matter of fact, if we look at VIX Central is in a contango. The June contract is expiring tomorrow night. It's actually quite low. It's not exactly a very, very steep contango. It goes for 20.50 to 23. Yes, it's a contango. So there's no fear in the market. And it's definitely visible here as well. At this point, again, without any strong news, the market is definitely going to try and hit the all-time highs again. And shall we see then a double top? At this point, there's no indication of that. I would say again, what I've said over and over is that we have to go with the flow, and the market is definitely, even if it's insane, the market is just slightly bullish. Now for today, here we see what I just said is that the market is maybe trying to test the former resistance for support. It may actually dip lower. This resistance will be losing its importance if it's tested and penetrated over and over. But it's still valid. We can't actually discard a scenario where, okay, the NFP was a one-day wonder and the market will go back to its former resistance. What I've said before, what I've said last week on Slack, is that even though the market tested 41.80, even tested down to this fib, which is not appearing on the chart right now, the real test would be 41.40, and if it breaks, it would be then 40.60. But at this time, there's no chance, unless there's really some bad news coming, there's no chance that the market will dip this low. What is probably more likely is that, again, the market will wait for FOMC. Last week, the economic indicators were not very clear. Even NFP was not very clear. There's some inflationary pressure from higher average earnings. Employment is not looking that good, but at the same time, they may not be. I mean, if we look at jobless claims the day before, a lot of participants are not really getting back into the job market just yet. So we can look at this as an extension of the trading range. We have that key level to monitor today, and probably aim for the same trading range, 41.80, 42.20, which is too narrow in the current volatility environment. Admittedly, volatility as per VIX is around 17-18, but the 1 SD move projection of a 1 day is about 30 points. So the market should hover plus minus 30 points every single day, or up to, 68% chance of the market going into a 60 point trading range. So looking at 41.80, 42.20, it looks definitely too narrow. This week we have not much. The trade deficit is probably going to be stable. We can watch petroleum because there can be some tension on commodities, and probably we will be looking at jobless claims and CPI on Thursday. Hence the first few days of the week are likely to be basically directionless. Okay, of course this report will be updated every day on Slack. I'm sorry if it's not clearer, but the charts are not providing that much information at the moment. There's still a lot of liquidities. I also look at the commitment of traders, COT, because there may be the retail traders fueling the bull momentum while institutionals are starting to sell. Generally, when the market moves abruptly, the large funds have difficulties disposing of large lines of stocks. So it's actually perfect for institutions to just feed the market, selling smaller lines as retail are actually buying still in the market. This is not a rosy outlook. This is not a market that grows naturally from earnings or good news. I think there's still a lot of uncertainty in this market, and the best we can get is a trading range until clearer news come up. Thank you for watching. There will be updates again on Slack, and next video will be on the current trades. Thank you for watching, and bye for now.